morning, everyone. This is Amit Prabhari, founder and managing director of CR Forex. As a country, we are a net importers of good. In the year FY23, from period of April to Jan, we have imported goods worth $601 billion and we have exported goods worth $372 billion. So our trade deficit was close to $229 billion. But the good news is that in the current year, our trade deficit is close to $207 billion. Why? Because our exports have also fallen, but our imports have fallen sharply. As a country, we are a net exporter of services. FY23 pe, we are a net surplus. Service export surplus was $117 billion, which is increased to $136.77 billion in the current FY24 from period of April till Jan. Now, what is the bigger impact of this? So the bigger impact of this is overall trade deficit has come down by massive $40 billion, which we can say is positive for rupee. And going forward, we expect trade deficit to further reduce as we are expecting our exports of goods and service will continue to increase and imports will reduce because oil prices are not going to rise for next 5 to 6 months. So now our trade deficit is reduced, our current account deficit is reduced, and flows are also coming in Indian equity and debt market. From November till today, we have received close to $15 million का flow, but rupee is still hovering around 83 का levels. So last week one of the viewers commented that आपका वीडियो देख के ऐसा लगता है किडनी बेच के USDINR शॉर्ट करे, लेकिन USDINR नीचे नहीं आ रहा है. स्पेशली उनके लिए ये पॉइंट एलॉबरेट कर रहा हूँ कि रुपी नीचे क्यों नहीं आ रहा है. Yes, the answer is RBI. RBI is acting like a strong wall, not allowing rupee to appreciate drastically. Let us understand how. On 3rd November 2023, our forex reserve was close to $590 billion. अभी अपना forex reserve है $617 billion. So increase हुआ $27 billion. ऐसा assume करते हैं कि RBI ने buy किया हुआ close to 67%, बाकी 33% revaluation of other assets होंगे. तो close to $18 billion they have bought in spot market. Apart from spot market, RBI also intervenes in the forward market. So in the recent monthly bulletin, we have been able to understand that between November 2023 से लेके December 2023 के अंदर पे RBI have bought close to $14 billion in the forward market also, resulting in overall buying of $32 billion, because of which rupee has not been able to trade below 82.80. But the question is where the rupee is heading. Let us understand that. Fundamentals of Indian economy are stronger. Plus we are expecting Fed to decrease interest rate in 2024. And we are expecting Indian bond will be listed in JP Morgan bond index. Basically, flows will continue to come in Indian economy. So when the flows are coming, RBI might intervene and try to observe all the flows. But the pace of absorption might reduce drastically in coming days, as one of the ill effect of buying lot of dollars is that it adds inflation in the economy. So the bigger view remains the same. We are expecting the pair to gradually move towards 82.20 and 82. In the short term, 82.80 can act as a strong support for the pair, and the pair can bounce back towards 83 to 83.10 kind of a level, but it will act as an opportunity to sell only, as the overall view remains towards 82.50 and 82. Let us discuss strategy for thin margin exporters like agri exporter or chemical exporters. They will appreciate the fact that we have been advising them from last 2 to 3 months that they should follow 100% hedge ratio and they should cover 100% on a back-to-back basis. The idea is still the same between 82.90 to 83.10. This should cover 100% on a back-to-back basis. If someone wants to wait, they should keep a strict stop loss of 82.80 or costing whichever is higher. If 82.80 is broken, do not think, just go and cover. Now let us discuss strategy for thick margin exporters like textile exporters or engineering exporters. The idea is that they have to keep on covering between 82.95 से लेके 83.10. What kind of hedge ratio they have to maintain? If they are covering against order, maintain a hedge ratio of 85 to 90%. If they are covering against anticipation of entire turnover, they can take the hedge ratio towards 65%. And the last idea is that they should not pre-utilize their existing profitable forward contract, as we are expecting the pair to move lower. So basically, they should let their profit grow. Now let us discuss strategy for importers. The strategy is same. Play it like a test match, which means that cover very slowly. They can cover 50% of their imports which are due for the next 30 days near 82.85 से लेके 82.95 के बीच में. For remaining, they can keep a stop loss of 83.15 and wait. Earlier, we have advised them to take buyer's credit or supplier's credit above 83 level. We will continue to advise them that between 80, say 83 also, they can continue to take buyer's credit because the overall view is on the downside. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.